currency markets. If we simply have a look at what you can do, the currencies that we've got listed here, if we simply look at the Australian against the US dollar, if we want to trade in that, you can in $100,000 or an amount less than that. Let's make it say $20,000, so you get a feel for it. You will note that there is no ticket fee associated with this. You'll see down here that you now have a two-way market being quoted to you, which is exactly where the current market is. In this platform, as in with the large platform, these are live prices. You'll see up the top here that these are going yellow and moving around. That is a price change that's occurring in that particular currency pair, and these are live markets. There's no charge for that, simply because there's no exchange behind it charging us. So we'll provide you with a live market. Now you can simply come in here if you're looking to purchase this currency. The current ask price that we're offering you is 67.6, 67.5, 68. It's constantly changing as the market moves. This is what currencies do. This is a natural thing that happens in currency pairs. If you're happy with that price, you simply click on the price and it will give you a position. You have effectively now, or I have, bought 20,000 Australian dollars against the US dollar at that rate there, for value the 6th of May 2009. The reason it's the 6th of May is that the currencies, all currency pairs on this platform, trade 2 days in advance. That's simply because the currency markets globally are physically delivered. Exporters, central banks, everybody else that's involved in the currency market would normally have to physically deliver, because of the sheer volume of transactions and dollar values that are going through on a 24-hour basis. 2 days is allowed to get all those settlements through. We do not let you settle. In other words, if you bought $20,000, someone has to give you $20,000. In turn, you would have to give them the equivalent in US, which means you'd have to have physical US dollars. What we do is we roll you over. In the next, we're not going to cover this in greater detail. Don't be alarmed though that it's dealing 2 days out. We will not make you pay or physically deliver currencies on the GetTrader platform, either this one or the other one. So now you have a position, value the 6th of May, that we bought. As with the other account, you will now see that you have an open position in here when it comes up, and it will show you on a mark-to-market basis what exactly is the position, and you can see it populating there now, that we've bought in the currencies, in forex, which is currency, we've bought Australian dollars against US. In other words, we're long in the amount of $20,000 at 73,677. The current price is 73,714. In other words, we've bought at a lower level than the current price, hence we've made $6 US profit, being that the second part of the currency pair is always, and there's no exception, is always where your profit will be calculated. Okay, the second part of the currency pair is always where your profit will be calculated. In this case, it's the US dollar, and therefore in this case our profit and loss will be in US dollars. We convert that to Australian dollars for you because your account is in Australian dollars. Okay, so there's no conversion that you need to be concerned about. We simply convert the profit and loss constantly at the current prevailing market rate, and when you square up, we'll put Australian dollars back into your account. You can also see in this account while I'm there that there's a $2,000 balance in here. You can activate an account in the mini trader and the big trader for that matter for 500 Australian dollars, or the currency equivalent if you're sitting offshore. I know there's a few people in this forum that are offshore. You can put as minimum of $500 in, which means that you and because you can trade in much smaller amounts here without the fees, It may be something that you learn very quickly how and whether currency markets are for your liking and whether you can use them for your benefit. Okay, so we've got a position there. The other ways you can do this, obviously, is if you don't like the current level but believe that the Australian dollar, for example, is going to go higher or go lower, but at these levels you don't like it. It may be that you want to place an order